All right, good afternoon, everyone. If you don't mind, let's just do a quick audio video slide check here. Just make sure you can see the slide. Should say we're proud to feature, if you see that, and you can see us, just type a Y in the question box or the text chat there. Let's see, let me make sure I've got it up. There we go. Is that better? All right, perfect. All right, again, welcome everyone to this presentation hosted by FFR Trading. My name is John Madison. I'm the VP of Marketing here at FFR Trading, and I'll be your host for this special presentation with the Rob Abel's team, Discover the Unbeatable Six-Figure Slide Trading System. You should see the risk disclosure here. That is important. You're all aware, trading, investing, it's risky business. Right? That's why FFR exists, because most people fail trying to do this themselves. That's why we pair you up with proven traders like Rob Abels, who have proven track records, and we diversify you among them to help mitigate that risk. All right, so the agenda today, what we want to cover here, some of the points that we want to hit in the webinar today. Let me just get my little, let's see, I think green will work here. I'm going to introduce you to Jake here in just a second. We'll talk about who we are here at FFR Trading and what our role is. Talk about Rob Abels, and we're going to review the academics of the program, and we'll go over the performance statistics since inception. And then Jake is going to do a deep dive into the strategy, show you some examples from the some recent trade examples here. We'll do a Q&A, so if you have questions for Jake or us here at FFR, you'll be able to access Jake and get those questions answered here. And then we'll take a look at all the educational material that comes with the system. All right, so Jake, I know you're here, so I'll bring you in. Jake has been, as you can see, surrounded by trading, coding, right, his whole life. His grandfather is a very influential, or was an influential system coder and developer in this industry. Jake, welcome. Glad to have you. This is our second go around here. So a lot of the folks here aren't familiar with the Rob Abels team. Just tell us a little bit about your background and how you got started here with Rob Abels.
Hi, yeah. So like John said, I've been surrounded by trading my whole life. Via family, and I started with Rob around 5 years ago as an intern back when I was in college. And after I graduated with my degree in mathematics, he went in and brought me on as a full-time on his team, and eventually trusted me enough to be able to manage his portfolios and do a lot of the analytical work and development in the system that we're going to go over today. But that's just a brief overview on me without digging too deep into it.
And that I did want to ask you about. I know you're in some preparation for you're a pole vaulter, and you're working your way hopefully to join the U.S. team at the Olympics. Is that accurate?
Yeah, no, that's absolutely right. I did pole vaulting on track and field on the Charlotte team through college for 5 years, and thankfully I'm healthy enough and fortunate enough to be able to continue training and hopefully go to the trials in June and July next year, and hopefully go to the Olympics on the big stage.
All right, that is awesome. That's fantastic. And so many parallels between sports and trading. So I think that all dovetails well together. All right, let's just talk about who we are here at FFR Trading and what our role is. So we're a boutique vetting firm. We vet all the traders that we work with, right? That includes putting them through what we call an 8-step certification process. That includes getting their brokerage statements. So as a subscriber, you're dealing with a veteran trader that's been thoroughly researched by us. The Rob Abels team is one of the traders that we've partnered with We handle the introductions between the traders and their subscribers because as you can imagine, most actual traders don't have the time or the skills to do their own marketing and so forth. And that's where FFR comes in. So we handle that for the traders, including the customer service side of things. All right, let's talk about Rob Abels. Oh, first let's meet the rest of the team here. Just some of the folks that you guys, when you call in or you talk to the people here, you know who you're talking with on the other end. Here's the rest of the team here. Some fantastic folks here at FFR Trading. All right, here is Rob Abels. Let's talk about Rob Abels for a bit. Rob started trading in high school. Obviously, he's the one that developed the six-figure slide system that we're going to be looking at today. But he started trading in high school just after, I guess, overhearing his dad talk about buying call options on Intel. And he ended up doing the same thing basically in his own account, doubled his money. And that essentially changed the course of his life. He became a professional trader in 1982. So he goes back a long ways. He joined an energy trading desk. He managed funds for the company's proprietary account. And from there went on to form a private trading group that managed more than $50 million with the funds primarily coming from the likes of Dean Witter and Merrill Lynch, and then retired in 1997. But at some point after that, he has this breakthrough with this slide pattern we call the slide pattern. You're going to show us some of that today, Jake, combined with options. And he gets back involved and goes on to consistently generate profits between 50 to 100% on average per year. Pretty phenomenal story. Anything you want to add to his story there, Jay?
I think so. In the very beginning, you mentioned that he worked with this. He saw his dad trading, and I think that's one of the things that Rob and I struck so well together. Is trading was pretty heavy in my family growing up, and when Rob saw the same thing, I think that's when he knew that me coming up in a similar upbringing knew that we would have such good chemistry together to be able to work together and create such a successful system, because we had the same ideals and we grew up in the same environment, so we had the experience before we even began trading.
Well, that's great. I know you guys are a great team that has been assembled to take care of the trading and everything here. So let's take a look at the six-figure slide trading system. These are the academic guidelines. So this is an option trading system. You guys trade both puts and calls, so you go long and short, so to speak. You do recommend an account size of $10,000, and you're trading about 5 to 7 trades per month and can carry up to 3 to 4 open positions at the same time. Tell us a little bit more about I know you've got like a watch list. That's not just any old watch list. You really hone down your watch list, and how do you work it from there?
As far as the watch list goes, like so obviously the S&P 500, there's many stocks that you trade in the S&P 500, and oftentimes that can be intimidating to a lot of different traders whenever they first become introduced to trading. One thing that we do is we run analytics on all 500 stocks in the S&P 500, and we incorporate different values such as Black-Scholes formula, spread percent, volatility percent, on top of a bunch of other things to mathematically, I think one of the key components is listed there, to mathematically choose the most tradable stocks in the market every single quarter. And that's how we were able to find highly tradable stocks that are very opportune and ripe for profit.
All right, awesome. And you guys use what we'd say advanced technical analysis. You don't have to give away the secret sauce, but I think you'll get into that, a little bit of that, when you start your presentation here. All right, so let's actually take a look at the numbers. This is the performance. This goes back to from January of 2018 through July, the end of July here in 2023. Let's see. In that time, and again, this is a $10,000 account size, allocating approximately $1,200 per trade. These are non-compounded numbers, right? So when we look at these, it's turning a net profit of $170,725 during that period. That is a return on capital of 1,707%. I mean, that's amazing. The average annual return, $30,833. That's an average of 308% per year. Those numbers are just knocking it out of the park. I mean, if you think, well, if we look at the monthly average, it's averaging about $2,500 a month in profit. That's on a $10,000 account. So we're looking close to 30% a month you guys are generating over this period. And if you're out there and you're watching this, think about, if you've got an IRA sitting there, trying to earn 5-6%, would this help? Would this help you reach your retirement goals? If you're just starting trading, could you benefit from following these trades and learning how this works? This is one of the things I do love. The average winner, $705. The average loser, just $282. That coupled with the fact that you're hitting 76% winners over that period of time. Anything you want to add to these numbers? Like I said, phenomenal numbers. I know you had a great June, right? June. I think you had all winning trades in June.
Yeah, that's right? Absolutely correct. And I'll get into some of the June trades later to highlight on that and kind of zero in on the broad scheme of results. But yeah, no, it's I'm really excited to get into how we're able to keep that win ratio even through unprecedented trading times such as COVID and what have you. As you see, the starting date is 2018, and even during that, we were still able to make a profit during that drastic time of volatility. And I'm also excited to get into our risk management strategies and how we're able to keep the losses so low and the wins so high.
I wrote a figure on the slide here, 100%. That's what you guys are up this year. Is that accurate?
Yeah, no, that's absolutely correct. Starting from January of this year, we're up 100%, even 8 months into the year, which we're very excited about.
All right, fantastic. Anything you want to add about these numbers before we move on? I mean, it's an unbelievable performance, not only this year, but historically. And I know you're going to get into some of those trades, so I can't wait to see some of those trades.
Yeah, no, I apologize.
No, go ahead.
Yeah, no, I keep on mentioning the word excited, but the reason why is because we understand that we're making decisions based off people's accounts, people's real money, and we understand there's a lot of emotions involved in that. And because of that, we're deeply invested in the decisions that we make. And I believe that's why we're able to see the results that we do, is because we actually care about the money that you're trusting us with, the decisions that you're trusting us with. We understand the risk behind it, and we weigh heavily on the decisions that we make and the recommendations that we send out.
And I know, and that's a huge point. I know our clients that are in your program now really appreciate that about you guys. Certainly they love the performance, but also the communication that you guys have, and we'll talk about that a bit. So guys, I will get ready to hand over to Jake. He's going to show you some recent trades that the system's taken and how they played out. So Jake, when you're ready, I'll hand over to you. And then when we come back, we'll have our Q&A session with Jake. We'll go over everything that comes with the service and show you the amazing offer that we've got for you today. So Jake, over to you, and you should get a little pop-up on your end there.
All right, let me see. All right, can you see this okay?
Yep, I see your slide.
Awesome. All right. So as previously stated, my name is Jake Davis. I'm the portfolio manager on Rob's team, and here I'm going to present to you today the six-figure slide system and kind of get into the bread and butter of the system. Talk about the building blocks. Unfortunately, not the cement today because of the time limitations, but hopefully I can show you that you can easily learn this system, easily trade it. It's very easy to learn. It does take time to master, but anybody can be a trader with this system, the educational materials that we're able to provide through it. So getting into some of the system aspects, I talked about the building blocks. So the system is built off of support and resistance areas and breakouts. So essentially that's an area where a certain stock either pauses on the either bullish side or bearish side and responds to that area. Either that or it breaks through it, and then that's also a response where we're able to take advantage of that volatility from that breakout. Trend lines and the support and breakage of them. Trend lines are essentially a connection of swing highs or swing lows, depending on if it's an ascending or declining trend line. And the system automatically detects all this stuff, which I'll be able to get into throughout the slideshow. But the system automatically detects the swing highs and swing lows, shows the trend lines, and lets us know when that trend line is broken or if it supports, and allows us to be able to swiftly act on it and recommend the best possible opportunities. And on top of that, wedges, which is another strategy that I'll be able to illustrate for you in just a second whenever I get into some of the real trades that we were able to do in the month of June and even onward. Divergence, where if a stock makes a new high, trades down, and then it makes another high, and vice versa for the bear sense, able to take advantage and automatically detect that. And also swings and swing reversals. I'm talking about the swing highs and swing lows. The system is able to detect if a swing is generated and the reversal of that swing, and let us know that we need to be able to take advantage of that and when the most opportune time is to take advantage of that. So starting off, so we talked about the June performance. This is every single trade that we recommended in the month of June, starting with CVX on June 1st. And as you can see, there's nothing but green on there, which we're incredibly proud of and happy to see that we were able to produce such a lucrative month. Not one trade was left off. This is every single trade that we recommended in the month of June. And I'm not going to have the time to go through every single one of these trades, but as part of a perk for subscription, we every single month we go through every single trade, do an in-depth analysis video, give the exact reason why the system is able to detect it, and educate our subscribers on how we are able to take advantage of these opportunities and how we're able to take advantage of the volatility to be able to exit at the most opportune time. And as you will see here in a second, it is simple for the everyday trader to be able to detect when this stuff will happen, so long as you know what to look for. So starting off, and forgive me, I'm going to be drawing a lot of chicken scratches, and feel free to ask any questions at all in the Q&A following this presentation. But starting off, I'm going to go ahead and give an analysis of our trade in CI, or Cigna Group. So CI was a trade that we recommended on June 6th, and this was a top resistance trade where we recommended a put option. And this resistance was established from these points, these arrow points that you can see here, here, and lastly, right here. And as you can see, whenever it hit this area, trade it down, then trade up again, hit this point, trade it down, then trade up again, hit this point, and that's when the system let us know, hey, you need to be looking for put options. And when a negative response was established, on that day, we went ahead and recommended the June 30th 255 puts at a price of $311. Now, once again, this is all stuff that we talk about in our monthly report where we analyze our trades. But moving on, giving the reasoning why we execute the exits that we did. If you notice, in this box right here, this gives a description of the time that the trade was entered, the price, the date, and what the percent win, the profit win, everything that you need. If you notice, there are two different trades on there, and the reason being is because, as mentioned previously by John, there's a $1,200 account allocation, and when we invested $311, that netted us 4 options, which gave leadway to be able to exit half of a position. This is one really neat thing about this system, is there are half exits. And what that essentially means is when a trade is entered, there are essentially normally 2 profit targets. There's one where we initiate half exit, and there's a second one which is a little bit more aggressive than the first one. However, to act conservatively, with that second position is always going to be liquidated at a stop loss of break even to ensure that no money is lost, only money is gained, and we are able to make sure that that trade is a winner. Now, moving on with CI, as you can see here, after a day of entering the trade, CI traded immediately down into this range. And what this range was a connection of multiple candle wicks where it stalled out right here and then began to stall out right here, as shown evidence by this bounce right here. And this is essentially when we recommend liquidating this position at a profit of 61%. Now, once again, I apologize for the chicken scratches. I'm gonna do my best to to minimize the illustration as well, getting the point across. But as shown on the next day, I'm going to go ahead and erase that right there. On the next day, CI began to trade up in response to this resistance area. Once this trade up occurred, that's when CI had reached a break-even price in our option, which is when we recommended liquidating the rest of this position at around a $9 profit to cover the commission cost to ensure that no money was lost. So moving on to our next trade, American Express, which was entered just a day after CI was entered. And this is a trend line trade, but also a wedge trade. Now, I mentioned previously in our trend line bullet point how there are wedge trades. And this is essentially when you have a declining trend line and an ascending trend line, and they intersect, and you have the stock trading in the middle. And once it breaks up, it normally goes up, or if it fails, then it'll re-enter the wedge and then retest the bottom. Now, this is exactly what's happening with American Express here. As you can see, the wedge is established with this intersection, and the system indicated that there was a declining trend line as established by these swings. And after this third point, it traded down, began to trade back down a range, and then established an ascending trend line, which confirmed this wedge pattern. Let me go ahead and remove that arrow so that you can continue to read the text right there. Now, once this wedge pattern was established and it showed a negative response and a failed breakout of this wedge on this bar right here, that's when the system lets us know, hey, you need to be looking at put options. It's trading back into that wedge, likely going to reapproach this ascending trend line right here. So because of this, we recommended the June 30th 170 puts, and as shown on the next day, that's when it traded down to this ascending trend line, and the system let us know, hey, it traded down this trend line, showed a positive response to this trend line. Now keep in mind the white bars are positive bars, the black bars are negative bars, showed a positive response to that trend line, and when this happened, that's when we went ahead and recommended to liquidate this position. Now, as you can see, there are two trades here. At the open of the next day, we saw the gap down towards the ascending trend line, which is when we secured half the profit. And this is an example where we have a more aggressive second target, where, as you can see, the first percentage gain is less than the second percentage gain. Now, this is a minor example, but it shows you that you can make more off the second liquidation, and they're not always going to be break-even trades. All right, so continuing throughout the month, we have JP Morgan next. Now, JP Morgan, if you notice a trend here, they're a combination of different signals for every single trade. Now, right here, we have a resistance area, top resistance area, as well as we have a trend line. Now, one of the awesome things about this system is it's able to use these different signals to work interchangeably with each other to be able to make the most constructive decisions that it can to be able to take advantage of this volatility. So this resistance was established by these 3 points as indicated by these arrows, where it continues to swing, reapproach, and then on that third approach, normally on the third time it hits, plummets. And then after a gap up, continue to trade within the range, kind of responded right here, continue to swing before approaching this resistance area once again. And once it approached that resistance area again in the middle of June, that's when the system let us know, hey, you need to be looking for put options. So on a negative response, that's when we went ahead and recommended the July 21st 141 puts at a price of $325. And on a single day, JP Morgan traded down substantially before vaguely responding to this decline trend line. After the strong move down at around right here is when we recommended to liquidate the first half of this position. And that's when we made around a 23% profit, or we liquidated at around $400. And once we saw a vague response to this trend line right around here, that's when we recommend liquidating at even higher profit. This is another case where the more aggressive profit targets are able to net a higher profit for this trade while essentially eliminating the risk, because the second half is always going to be liquidated at break even. Now, sometimes there are going to be cases where on the next day there's a gap and then there's going to be a small loss, but we always try to liquidate the position at as close to break even as possible to ensure that the money is secure and the profit is still there on the entire position. All right, so moving on to the next trade. This is TPR, Tapestry Inc. This is another top resistance trade. Now, there's a lot of these. June was a responsive, or I apologize, a reactive month where it would hit these resistance areas and then respond to it, which is when the system allowed us to take advantage of it. And these aren't the only examples I'm going to present. There are going to be more, but without going too deep into it, because I've given a couple examples already, we have a response to top resistance right here, a swing, you're noticing a trend here. And then on a negative response, that's when you went ahead and recommended the 45 puts, because once it had hit this support or this resistance area right here, the system let us know, hey, you need to be looking for put options. We went ahead and got into a put option, and we went ahead and liquidated this position once again at this resistance area, I apologize, support area where we have multiple points connecting, and it had a positive response to it right here. That's when we recommended to liquidate the rest or the entire position at a, mind you, small profit, but still a conservatively well profit over the course of a few days while we are in different positions. All right, so NCLH. Now I told you that we were going to be looking at different strategies, and this is one big example. Now, NCLH has a lot of data here. I'm going to do my best to explain this as simply as possible to make sure that I'm not getting too deep into the bread and butter. But for NCLH, this is a stock that the system has been tracking for quite a long time, primarily due to this ascending trend line that was established sometime back in October of 2022. And this goes to show that the system continuously tracks these stocks over long periods of time and allows us to be able to find opportunities that had initially been created sometime almost a year ago. So the ascending trend line was established sometime in March, continued to respond to this ascending trend line. This is even a response right here when it got a little bit close, before eventually exploding in bullish price action, creating this ascending trend line right here. Now, this is an interesting concept that you can apply to your trend lines called a flag pattern. And essentially, a flag pattern is an ascending trend line that is met with two declining trend lines at the end, almost drawing an F, but we like to call this a flag pattern. Now, this flag pattern was established right here where you had a strong ascending trend line before creating a channel of two declining trend lines. Now, what happens with these flag patterns is they're able to, I apologize, I accidentally used my scroll wheel. One cool thing about these flag patterns is you're able to take advantage of these when the flag pattern eventually breaks out to the upside. Now, as you can see here, let me go ahead and erase this so that you guys can see a little bit more clearly. As you can see here, by this little wick right here, NCLH peaked through and closed above that declining trend line or that flag pattern. Now, once it closed above, NCLH exploded in price action before reaching the top of this resistance range right around here that was established way back in May of 2022. Once it had reached this point, it showed a negative response, and that's when the system let us know, hey, you need to look at liquidating this position, which we did at a tremendous profit of $924. Now, keep in mind, this was the August 18th, 19 call, and this is all information that we present to our subscribers, and for the sake of transparency, when we let them know why these decisions were made and when they were made, and how we were able to take advantage of the volatility. All right, so the last one that I'm going to go over is USB. Now, we talked about the June trades, and as you can see, every single one of them were winners. However, whenever I talk to people about what I do for work, a lot of times, I'll have people say, "Oh yeah, no, like I make a couple $100 a day in the stock market. I make $1,000 a day, $10,000 a day in the stock market." And no, you don't. You made $10,000 once or $1,000 once because you got lucky, and you lose 9 out of 10 times, but you don't talk about those 9 out of 10 times because you're embarrassed to. I don't listen to anything anybody says about the stock market unless they're comfortable to talk about their losers, because a real trader takes those losses and they're able to grow from them. They're able to continue to develop their trading strategy and it shows that they're actually invested into learning how to more effectively trade. Now, I'm going to do the same thing right here and talk about a recent trade that we had in USB, US Bancorp. Now, this is a failed breakout trade, and what that essentially means is you have a resistance area that I previously talked about that was established from this point here, and then from this big range right here, where it just continued to resist, and then I'm going to go ahead and get rid of that circle right now so that I can more clearly explain what's going on. As shown, USB closed slightly above that breakout line. Now, that what a breakout is when a stock closes above a resistance area, and when it closes above, normally it explodes in bullish price action. Now, the same can be true for the reverse. Say that you have a stock that has been resisting a bottom for a while, then it breaks through, it'll continue to trade down more often than not. However, if that breakout fails, normally the results can be detrimental. Now, one awesome thing about this system is it's able to detect when this happens. So on the next day, after we went ahead and recommended the 37.5 calls, the September 15th ones at a price of $309, USB kind of played around with this ascending trend line right here, when it seeming like it wanted to get closer and closer to it. And on the next day, that's when it broke through both that decline trend line and the resistance area, and then proceeded to continue to trade down. And it was on this bar. Let me go ahead and remove my chicken scratches real fast so I can go ahead and draw a circle right now. It was on this bar right here, whenever it showed evidence that I want to continue to trade down and it had a failed breakout, that we went ahead and recommended liquidating this position. Now, despite it being a loss, which of course we take to heart, it could have been much worse as USB continued to trade down after we liquidated this trade near the open. As you can see, we liquidated this trade at 10:14 a.m. and it was as soon as it failed the breakout. And this was at around this point right here, this horizontal line. Now shown, it continued to trade down substantially. This 15% loss would have been much greater if we didn't act conservatively and if we hadn't liquidated this position as soon as we knew that it had been a failed breakout. All right, so closing up, there was a lot covered. Once again, if you have any questions about anything that I covered at all, please feel free to ask. I'll be happy to answer. But some key takeaways for this system: we have proper risk management. Now, I talked about it a few times. We have different risk management policies, and we try to act as swiftly as we can whenever the system lets us know that we need to liquidate or enter a position. And we don't gamble. Like I said before, we understand that we are dealing with real people's money, and they are trusting us with any decisions that we make, any recommendations that we make, and we understand the gravity behind it. So that is incorporated into our risk management strategy, where we make sure that we're making the most constructive decisions possible at the most opportune time and not risking it. We're not going to sit there and say, oh, you know, it might bounce, it might go higher. No, if it breaks the rules, we get out. If it qualifies for our rules, we get in. It's as simple as that. Also, part of our risk management strategy are the half exits, like I talked about before, making sure that when we liquidate half of a position, we make sure that the other half is going to be as close to break even as possible. And if it gets to break even during intraday trading, we make sure to get out. Even if there's evidence that it might go higher, there's always a chance that news can come out, a whale could dump, anything can happen to make the stock continue to go lower. And there's a chance that, you know, the money could be risked. So we make sure to get out. And it also allows us, like I said before, to get higher profit targets. We have quick entries and exits for fast profit turnovers, as is the nature for options trading. A lot of options trading, you hold on to the option for around a week, 2 weeks. We make sure to quickly turn over, not turn over, to analyze the stock to make sure that it's not going to be held on for too long to where it would reach a time depreciation value. And what I mean by that is when a stock gets closer to its expiration date, people are willing to pay less. So when that happens, even if the stock has gone up, you may not get that much more. So with that being said, we make sure to quickly act on trades that we need to make sure to liquidate. And in order to prevent it from getting close to the expiration date, we make sure to buy at least 30 days out from the current day that we enter. Hands-on education with rapid responses via phone or email. We have a support email as well as phone number where we're constantly offering support in any questions that you may have. And we take pride in educating people how to trade. As you can see by all of my chicken scratches, I am excited to teach people exactly how the system works, because you don't need a fancy degree to know how to trade. You don't need like 10, 20, 30 years to know how to trade effectively. As long as you dedicate the time and think intuitively and rationally about your decisions and don't act emotionally on trading, you're able to be a successful trader. So long as you know how to take these losses and you know how to act on these losses to make yourself a better trader, like I mentioned previously. And lastly, this is a handcrafted system. Every single thing that I keep on mentioning the system. This system is manually coded by our team. Every single indicator, every single thing that we use to be able to make decisions on these trades are handcrafted, hand-coded by our team in order to make it a unique system. And this isn't everything that we incorporate to the system isn't available to the public. And we understood that whenever we were developing it, which is why we had to create the custom aspects to the system. And one analogy I like to use a lot with this system is like I said previously, there's 500 stocks in the S&P 500, and it can be extremely intimidating for traders. What this system does is it's essentially a magnet for that needle in the haystack, that needle being the trade, that one opportunity that you need to take on. And if you miss it, you lost out on an incredible chance to make a great profit. And like I said, what this system does is it puts a magnet to that haystack and pulls that needle out and lets you know, hey, you need to be looking at this, you need to act on this, and this is what you do whenever it reaches these certain points. So that essentially sums up the system and the time I was given. I won't take up any more of your time, but shortly I'll turn it over to John. But thank you so much for watching me draw on charts for a little bit. Hopefully this brought transparency to how the system works and how hopefully brought confidence to you in knowing that you are able to trade this. You're able to learn how to trade this. As long as you dedicate the time and you actually want to learn how to do it, you can be a successful trader with this system. But that's all I have. John, I'll go ahead and turn it back over to you. But once again, thank you so much.
All right, thanks. Great stuff, Jake. Guys, it's real world trading, real money for our subscribers. It's the real deal. I don't know what else to say about it. So let's go ahead and do the Q&A. So guys, if you have questions for Jake or us here at FFR, go ahead and post them and I'll relay those to Jake. And let's see, we've got Mike. Says, greatly appreciate your mentioning risk management and showing us trades that don't work out, right? And I know that's a big point for you, Jake. You talked about that in your presentation. Jonathan wants to know, how do you identify which tickers to observe for trading? Is it algorithmic, known historical ranges, news reports, other ?
So we deeply incorporate stuff that goes on in the world into our trading. As some of you may know, there's a lot of stuff going on in China right now that puts their economy greatly at risk, and in turn puts our economy at risk. And on top of the Fed pressure, it makes us need to act very carefully about our decisions. Now, in terms of what tickers we actually know how to look for, like I mentioned a few times that like the system lets us know when certain stocks qualify. What we do is we feed these stocks, in the stocks that we mathematically evaluate to be tradable, into the system, and that's how it lets us know which stocks are qualified for certain criteria. And one of the things we offer is a different service, a newsletter, where we do provide these stocks that qualify for different criteria, but that's different than from what we're presenting here today. This is something that we're able to incorporate into our system to basically, like I said, be a magnet for the needle in the haystack. Hopefully that answered your question.
All right, great. And then let's see. Are the alerts typically issued near the open, near the close, or randomly throughout the day? That's a good question.
So part of, I mentioned earlier Black-Scholes formula, and part of the formula, what that essentially is it is a calculator for theoretical option value. It lets a lot of investors know what the option should be traded at. And another thing that's incorporated into real-time trading is premium. And how that premium is varied is based off volatility. Part of Black-Scholes formula heavily relies on volatility. The more volatility, the higher the price of the option is going to be. Normally at the open, there's a massive amount of volatility in response to overnight trading. So because of that, we try to stray away from trades at the open. However, that doesn't mean that we don't occasionally send opportunities at the open if they qualify. But just to avoid overpriced options, we try not to send trades at the open. Normally, it's towards the end of the day because that's when the signals are confirmed. I mentioned the close a few times whenever I was analyzing some charts about like a positive close and negative close. That's not confirmed until the end of the day, whenever that closing intraday bar actually confirms that price and the data corrections do come in. So normally I would say from around 3 o'clock to around 3:40 is when you should expect like the bulk of trade recommendations to be sent.
All right, great. And let's see, Dale wants to know, how should a new subscriber decide what to do with the info in the daily email?
How should a subscriber know what to do with the info in the daily email? It's learned over time. I mentioned if you put in the effort to learn how to trade the system, it's easy to learn. It's difficult to master. If you do we never try to provide too many stocks. We try to provide the most opportune ones, but not too many to overwhelm the people that get the daily email, because we want them to be able to have the time. Like we understand not everyone is going to be full-time day traders whenever they get into this system, and we respect that. Because of that, we try to respect your time and give you the most opportune list while not giving you a massive list of like 80 or 90 stocks, because you're not going to have time to analyze that. How you're going to know how to act on it is by doing the analysis that you learn how to do based off of our analytical videos, as well as our reports and any questions that you might ask, the manual, like what have you. And if you have any difficulties at all or any questions, we try to be more than transparent about how we act on the trades that get qualified by our system. And even if you need illustrations on specific stocks or specific stocks that have been reported or anything, if you reach out via email or call via phone, we'll be more than happy to provide you with those illustrations so that you can mimic exactly what we did and continue to use that technique on future stocks.
All right, great. And let's see, Tammy's asking if she can use this to grow her IRA.
Yes, yeah, no, absolutely. It's ultimately, like, we cannot make an official recommendation on how you grow different accounts. However, at your own discretion, you are able to utilize this with different trading accounts depending on how you would like to apply it, to your retirement or what have you. But no, it is absolutely applicable to an IRA.
All right. And then let's see, someone wants to know, is 15,000 enough to trade with multiple contracts to be able to get the second runner on the trades?
Yes, yeah. So 15,000 is more than enough. Earlier John showed the statistics. The statistics are based off of the initial $10,000 account size with $1,200 allocated per trade. So all of our options, we never send out a trade recommendation where the option is going to be priced above $550, which allows you to be able to get more than one option per trade if you do allocate that $1,200. However, it's if you start with a $5,000 account, you can go ahead and get an option that's $250. That would be at your own discretion outside of our official trade recommendation, or you can just get the single option and then just take advantage of that single option. We don't do, I apologize, excuse me. We don't do half exits on losing trades. So if there is a half exit, the first exit is always going to be a positive exit. If it's a losing trade, there's no point to do a half exit, because the second one likely isn't going to break even, is probably going to continue to being a loser. So we liquidate the entire position. But sorry, I went off on a tangent. But yes, 15,000 is more than enough to be able to start with an account with our service.
And yeah, we mentioned earlier that 10,000 would be the minimum. So 15, you're good. Klaus wants to know, if I get an alert, does it also mention what the specific or what the alert is based on, the breakout or whatever?
At the time that you get the trade recommendation, it will not list the reasoning why. And it's often I get this question why it's not included. The reason being is because of the nature of options trading doesn't allow us to have the liberty to be able to type out the exact reason why we're getting into a trade. It's something that we do want to implement in the future. However, at this current time, it is, if we did do that, it would be at the sacrifice of an opportune option value. So if normally whenever we send out trade recommendations, with the nature of options trading, you have to be able to send it out at the second that you find the opportunity. Otherwise, the price that you're going to get is going to be much worse than the price that you could have gotten even 15 seconds ago, because you can lose $100 in option value within a minute. So if we do take the time to be able to type out the reasoning, it'll be at the expense of maybe even like $150 if we were able to do that. So the sacrifice isn't the sacrifice and to be able to lose profit on the portfolio and lose profit for our subscribers isn't worth it at the time, we believe. However, like I said, it is something we do want to implement in the future, and all trades are eventually analyzed so that you're able to understand why we are able to, or why the system qualified that trade at that time.
All right, and then Mark wants to know, how far out are you choosing your expirations? Are you trading at the money or in the money?
So it does vary. I apologize. Was that it?
Yeah, I was just how do you guys typically handle the options that you're choosing?
Oh, okay, yeah. So for the expiration, it's always going to be at least 30 days out. We often go for monthly expirations to ensure that all lots are able to be filled and the volume is appropriate to be able to allow our subscribers to be filled. But in terms of being in the money or out of the money, it occasionally varies depending on the pricing of the option and the spread percent, et cetera. So if the spread is going to be 10 or 20% in the money, but in contrast, it might be 5 to 10% out of the money, and we oftentimes will go for that 5 to 10% spread because it is more opportune and we're going to be able to get a more consistent fill. Likewise, when it comes to like the actual pricing of the option, sometimes in the money, like very, very expensive stocks such as like the SPY index can be exorbitantly expensive in the money. Because of that, we oftentimes need to go out of the money to be able to allow the subscribers to be able to afford multiple contracts or even get underneath that $550 threshold. But backtracking for a second, just to build off of like the expirations, right now we're sending out primarily October 20th expirations, which is the monthly expiration going out, because the September 15th expiration, which we had previously sent before August 15th, was 30 days out. But now we have to go to the next monthly expiration because it has the most amount of volatility and the most opportune options for our subscribers.
All right, and let's see, I'm just kind of going through because there's a number more I want to make sure we get. Daryl asks, is there a way to compensate for price creep? In other words, you recommend an option at $2, but with everyone seeing the alert, the price is now $2.20 to $2.40.
So to compensate,
how do you guys handle your limits like that?
So to compensate for price creep, if an option is running, we do our best to be able to send out a limit order above the ask to ensure that you're able to be filled below the limit price that we recommend, because we never recommend entering an option above the limit price that we list. However, if there is an issue with you receiving an email later than what we intend, then ultimately it will be at your discretion. We never recommend entering a recommendation the day after we send out the initial recommendation. However, on the day of the recommendation, if you are able to get filled below the option price, then we still do recommend entering into the option. But on the note of price creep, in order to compensate that, we would still recommend entering into the option. However, your results may not affect the official results that you might see in the report due to you maybe getting filled $20 or $30 above the price that we recommend. However, the opportunity is still definitely there and still should be taken advantage of.
All right, and let's see, Pamela asks, are the alerts sent by text or email or both? They are, I'll answer that one for you. They are sent by both text and email. You can choose if you want both. And then Klaus again wants to know, do you have a compounding table? The numbers that we showed you were non-compounded. I think those are more important. You certainly can compound your account if you wish, but we want to give you kind of the baseline there. All right, let's go ahead and wrap up the Q&A. Guys, if you have more questions, certainly we'll give you the number to call or the email to give us a call or send us an email, and we can answer the additional questions that you might have above and beyond. But I think as we get into the service, the education, and the signal service that comes, everything that comes with these programs, I think you'll see. Let me just turn my camera back on here. Sorry, I left you all alone there for a while. All right, so what do you get with the service? So first, you get direct access to Rob Abels and the team. Any educated questions that you have regarding the markets, the methodology, you get the trade alerts, of course, to your email and or your cell phone. All right, so those will be sent out, and I think you answered how you send those out. The daily recaps, so you always know, what trades are open, what trades have been closed that day, any, new positions or anything you're carrying currently. All the educational material that comes with the service, the entry rules, the exit rules, the money management rules, and then the weekly/monthly wrap. That's a detailed overview of what's happened with the system and the markets over the past week of trading. The trade setup, that's a weekly newsletter. And then somebody asked, I didn't get to the question there about the brokers. We do offer you access to third-party registered brokers. This is an option for those that don't have the time management available to trade these themselves in their own accounts. So we have, there are brokers that Rob Abel's team works with that have been trained to execute their trades on your behalf, so you can set that up, or you can just get the alerts yourself if you have the time and execute those in whatever brokerage that you wish. And then you do, of course, get access to us here at FFR Trading. And again, our role, again, is to help you build a well-rounded portfolio of strategies, right? You never want to have just one strategy running, because all strategies have periods where their equity curve is rising and drawdown. And so to have and be most effective, you want to allocate money across several different systems and help smooth out that equity curve, if you will. All right, anything you want to add to what folks will get when they subscribe to the six-figure slide system?
I really want to hammer in the educational aspect. Like I said before, one thing we do take pride in is being able to teach you how to trade. We don't want to make phantom decisions where we're recommending what to do with your money, and we're not giving you the reason why. We're not teaching you how to trade like we do, how to trade like Rob does. And we want to be able to teach you, like I said, how to trade like Rob, how we make our decisions, how the system trades. Our system is custom coded. It incorporates different different indicators that aren't available to the public, but it's all stuff that you're able to learn. Like I said before, you don't need a fancy degree to learn how to trade. You don't need years and years of experience to know how to trade. All you need is to be able to take your losses, be able to learn from your losses, being able to mitigate them and rise from them to be able to continue to trade effectively, grow your portfolio, and become the trader that you want to be. So ultimately, that I think is going to be something that we can offer you, is to be able to educate you to be able to get to that point.
All right, fantastic. I think that would be very encouraging to folks out there, especially those who've been just getting started or been trying to do this on their own. So as we begin to wrap up, you came to this webinar for a reason, right? Everybody's here for a reason. You're looking for something. You're looking for a way to generate monthly income, or you're trying to build your retirement. Earning a few percent a year in your IRA, right, is not going to cut it. You're never going to be able to retire at that rate. You need something different. Maybe you're looking for a trusted source that where you can learn to trade if that's your goal, or if you'd like to learn to earn some income while you're learning. Maybe you don't have the time to do this yourself or the expertise, and you're looking for someone that you can trust. So our goal today is to provide you, with a solution for you to consider. All right, so let's go ahead and talk about the offer that we've got for you today. What we would need you to do, because the nature of these systems, we do need to speak to you because we have to make sure this is a good fit for you. But what we're offering you is you're going to get a 50% off discount off our standard annual license. Plus, we're going to add a year of trading for free. So you're going to get 50% off the first year, and the second year is free. That's today only. We're extending that introductory offer, so you need to call us and lock in that introductory price. I don't know how many are available at that, but when you call in, they will let you. Let me put up the numbers here for you guys. So you can use the 737-292-4425 number. If you're outside the US, you can use that number here. You can use the 800-883-0524, and also support at ffrtrading.com. If you have questions, you can submit them there if we didn't get to them today. So again, 50% off the standard license fee, and then we'll throw in an extra year for you for free. But you got to call us today. That's expiring today. Anything you want to add, Jake, to everything that we've talked about today? Anything that you want to pass on to those folks listening here?
No, I like John said previously, I hope you're able to gain something out of this. Even if you don't go for the offer, I hope that you guys were able to get something out of this this webinar today, and you're able to make something out of my my scribbles on the charts for a little bit, and you're able to apply some of the stuff to your own everyday trading, so that one day hopefully you're able to want to be able to continue that education and learn how to continue to elevate your trading. Like I said, today I only covered the building blocks. There's still cement that holds those blocks together, and that's stuff that we all that we make sure to go over with our subscribers to bring transparency into exactly how the system works and exactly how we trade and why we make the decisions that we do.
And it's like I said, it's a ton of support that you guys provide. And that's really what you need, especially if you're getting started, or if you're somebody that's been trading and you're not successful. Pamela, I just picked up Pamela's question here. Pamela, give us a call, speak to one of our strategists, and see if they can't get you back on track. Very important. That's why we're here, right? We want to work with you to try to, help you reach your financial goals. So guys, call that number, 737-292-4425. Or you can use the 800-883-0524. Support at ffrtrading.com is the email. You got to call us today. Again, we do need to speak to you because we have to make sure this is a good fit. All right, this is not for everybody, and we don't put people in programs that are not suitable or right for them. All right, guys, we thank you for being here. We do record these. If you want, you can just give us a call. And if you want a copy of the recording, and we'll send that out to you. All right, Jake, really appreciate you coming in. Good luck with the trials that I guess you're going to be starting here pretty soon. I hope to see you maybe on the TV in the not too distant future, right? With that pole in hand, setting a new world record. How about that?
Oh man, one can hope. Thank you, though.
All right,
I
folks.
appreciate it.
Thanks for coming in, and guys, I hope you have a great rest of your trading week, and we'll see you back in the next webinar. Take care.
Thank you, everyone.